Today we're going to go over commissions. We're going to focus on the Medicare commissions, but we are going to touch on some other products because Medicare agents don't sell only Medicare supplements or Medicare Advantage. Most Medicare agents don't only sell those products. We teach a 4-product progression. We're going to cover those products and some others just to give you an idea of what an agent should earn as a street level commission. Okay, so what an agent should expect to earn at a bare minimum commission-wise for the products that they're selling, and also how they're paid those commissions. So I'm going to start with Medicare supplements. I'm going to get right into this today. Oh, by the way, don't forget, this program is being brought to you by the 30-day Fast Start program at MedicareMillionaire.com. So go on over to Medicare Millionaire, check out that 30-day Fast Start program. It doesn't matter if you have the knowledge of how these programs work. If you don't have a plan, you don't have a strategy, you're not going to be successful. You need to be motivated, be certain at what you're doing, and know every single day exactly what your plan is so that you can be successful. Too many agents are just floundering around. They go days where they don't try to sell anything at all. They make no calls. You need to be working every single day. You need to have a plan. 30-day Fast Start program. Go to MedicareMillionaire.com. Sign up for that program. All right. As I said, we're going to start with Medicare supplements. Now, I'm going to go over several different ways that Medicare supplements are paid, but also I'm going to go over the different areas of the country, because where you sell could affect what you're selling or your commissions just as much as the commission percentage. So now on the high side, as a street level agent, you could expect to earn about 23 points. So that would be on the high side. I don't see too many agents get more than that. As a matter of fact, there's not a lot of spread in Medicare supplements. There just isn't a lot of spread. So you're going to get your 23% on the high side. There are some companies that'll pay, very good companies, and there's very good reasons for selling those companies, but they'll pay they'll pay 18% commission on the high side. So it can be a very different spread in commissions depending on the product. And there's reasons to sell those companies at a lesser commission. And then there's also fixed commission products, and I'm going to go over those as well. There are outliers. There are other types of commission structures, but this is the majority of them. There are going to be some fixed and some commission. At 23%, now I'm going to bring you into my computer and I'm going to show you a grid. And basically what this shows is you can see Medicare supplement commission is 23% for years 1 through 6, 3% thereafter. What you see there is South Carolina, the typical plan G, the typical premium for a female age 65 is $93 per month. Now, at 23% commission, that works out to be $21.39 a month, or just look at the annual commission for that is $256 a year. So that's not a lot. Over a 5-year period, that person could expect to earn, or that agent could expect, if they can keep that business on the books, could expect to earn $1,280 if they were to maintain that plan for 5 years. Now look at the dramatic difference. In Florida, for the same program, I'm getting a little crazy with my typing here. For the same plan G, because the premium is so much higher at $170 a month, that individual agent is going to earn $39 a month commission, or $468 a year. That's $468 a year. Over a period of 5 years, that's $2,340. That's a big difference between selling a Medicare supplement Plan G in South Carolina and selling it in Florida. So you need to watch the commission levels, but you need to be paying attention to the states that you're selling in as well. Now, at age 80 or 81, a lot of these plans will drop down in commission quite a bit. So you need to focus on that as well. Okay, let's look at another payment structure that many insurance companies have. Not many, but some. Several, I should say. But there's several very popular companies, and this is not meant to be precisely what any particular insurance company pays, but mirroring what might exist in the industry. In the state of Alabama, this one particular company, this fictitious company, they don't like giving information about their particular companies. I've been chastised for giving out information about particular companies' data. So again, this is just a hypothetical here. In Alabama, this hypothetical company would pay $242 a year commission year 1, $242 years 2 through 6, $121 years 7 through 10. Now that's flat. Doesn't matter. It's not based on percentages. That's just what they pay you. That same company in Connecticut would pay you $356 year 1, $231 in years 2 through 6, $115 in years 7 through 10, then drop down to $46.20 thereafter. In Vermont, you can see it drops down a bit. And the reason I'm showing you these different states is because you need to be aware. If you're selling over the phone, which many agents are, and you're projecting out income, you need to focus. You need to get a grid. And you need to see what these companies pay across the country in all these states. Every company is a little bit different, and some are dramatically different. So Vermont is $183 year 1, and years 2 through 6, it drops down to $91.50 and then $36 thereafter. California is $345 year 1, $345 years 2 through 6, and $172.50 years 7 through 10. Then it drops down to $69. So you can see, while they don't pay as much in the first year as, say, Connecticut, they are paying a lot more in years 7 through 10. Now, somebody might say, well, they're not going to be on the books years 7 through 10. Well, that's not true. If your client is in that plan, they get some health conditions, they may be stuck in that plan. So what a lot of agents are going to want to do is, after a client has been with a particular company a handful of years, they want to move them to a different company. That's a good strategy. Doesn't always work. Sometimes they don't want to move, and this is what you get. Sometimes their health prevents them from moving. Okay, let's move on to Medicare Advantage commissions. As you can see on the grid here, most states pay $539 for a new to Medicare enrollee. So you sign somebody up, typically somebody aging into Medicare, age 65, or maybe they're coming off credible coverage into Medicare, and you sign them up. You will receive $539 the first year, and then you're going to receive $270 each year thereafter, as long as that stays on the books. I've got them that have been on the books for 10 years or more. So that's nice. If the typical client's going to stay on the books for 5 years, if you buy into that figure, that's $1,619 that you're going to receive over a period of 5 years. Now, in California and New Jersey, that's a first-year commission of $672 and $336 thereafter, for a total of $2,016 over a period of 5 years. And why do I say 5 years? Because you got to look at the value. You cannot look at the first-year commissions when you're writing this type of business. Medicare is a business where you build for the future. Too many people are worried about today. No, it's about the future. You're building something of substance. Now, Connecticut, Pennsylvania, and DC is $607 with $607 first year, $304 renewals, for a total over 5 years, expected commissions of $1,823. Now, there's a little caveat to this. When I say that you're going to receive, in most states, $539 and $270 renewals, well, that again there is a caveat to that. And if you look at this commission table here, right here, you'll see January, if you write that in January, so you write somebody new to Medicare in the AEP, they're effective January 1st. You receive $270 on a renewal basis. Now, if that person were to be a new to Medicare, you would get how much? $539, right? $539, because that's what a new to Medicare gets. However, when that person is written in, say, for an effective date of February 1st, well, that renewal amount drops down by $22.50. Now, here's the math. It's $270. So $270, that's the renewal amount, and that's divided by 12 months. It's $22.50 per month. Okay? In January, you're getting that for 12 months. So that's why you're getting the full $270. Each month thereafter, now, if this is complicated, just think every month you're earning $22.50. Again, this is renewal commissions is what I'm talking about here. New to Medicare is $539. That's different. When this is a renewal, then this is a person that's had Medicare. They're 66 years old. They're 70 years old. They've had a Medicare for a year or two or 4 or 5. And you're writing them up. Well, you don't get the $539. You only get the $270 because the $539 is only the new to Medicare, right? Now, each month that drops down. Look at the table that I have here on the computer, and you see in February you're going to get advanced $247. You're going to receive in March $225. In April it's $202. In May it's $180. So what's happening here is each month that is going down $22.50. So if that's somebody's written for June, it's six. My marker is losing color here, but let me erase this and get it on here so you can see it. If it were June, what would the number be? Think it through. It's $22.50 times what? Times 6 months, right? So it's simple math. It's $22.50 times 6. You're going to receive $135. That's the advance. And then January 1 of the following year, you're going to start getting $22.50 each month for that person. So now, if this is a new to Medicare individual, you're also going to receive the balance. You're going to receive this amount, so you're going to receive $135 plus that difference on the $200. Again, new to Medicare, how much is it? $539 in most states. You're going to receive that difference, which is about another $270 advanced. So you're going to get $270 advanced plus $135 on a new to Medicare. This is not complicated. And if it sounds complicated, as I'm doing this, focus on the grid. Focus on the grid that I have here on the computer. The grid tells you exactly what you're going to get, plus the difference on the new to Medicare. That's it. So save this information right here, and then add the additional, the difference between this and the 539, not the difference between 270 and 539, which is about $270, right? 270 plus 270 is 540. That's how they come up with that number. Your renewals are always half of your first year or your new to Medicare. So that's it. I hope I didn't confuse you. It shouldn't be that confusing, but people ask me over and over and over about this. So you're not getting any less money, you're just getting less advanced. That's how it works. Okay, now we're going to talk about final expense. You should, as a street level commission agent, you should get about 115%, would be kind of normal for many final expense contracts. I know of contracts that are 105. I know of contracts that are 120, 125 for an agent, street level. Okay, but 115 is a number that you could count on as to be a typical commission that you should receive. Maybe 110 for many products. Typical commission, nothing unusual about receiving that. So don't sell yourself short on this. And why do I talk about final expense? Why do I throw that in here? Because a Medicare agent needs to sell some final expense unless they have this a system where they're selling high volume Medicare supplements or Medicare Advantage, maybe over the phone or something like that. But if you're selling in the home, or even in some cases selling over the phone, you should be able to pick these up. Certainly in the home, as a home final Medicare agent, home face-to-face sales, you should be picking these up. But so at 115% commission, a $50 a month sale will get you $690. A $100 monthly sale will get you $1,380. Simple math. You should be getting an advance of 75%. You should be able to get that much. I would only take 50% advance. But why do I put these numbers up here? Because you may need this to survive. So you need to sell this final expense. I keep telling agents this, and they keep fooling around and not selling final expense when they're selling face-to-face. And that's not going to work, especially if you're selling Medicare Advantage. And why is it a problem when you're selling Medicare Advantage? Because that prorated commissions, where they grade that down every month. So again, you imagine in your, let's go back up to this other commission table. So here we go. So you're in October, November, December. How much are you going to get paid? When you submit a deal that's effective October 1st, you're going to receive $67. When you write that deal in November, it's $45. If that deal is effective in December 1st, on December 1st, it's $22.50. You better be writing the final expense. I would not take myself off the track of being a Medicare agent first. That's where Medicare agents fail. They focus on other things, that they'll focus on final expense, and it'll screw everything up. You're a Medicare agent. Keep selling Medicare. Hone your craft. Become better and better and better, and add in the final expense sales. Learn your transitions and learn them well. All right, next, hospital indemnity. Why would we talk about hospital indemnity? Well, because it's a natural sale, and this is again where you need to be able to sell these, make these sales. If you sell a Medicare Advantage plan, you should be selling a hospital indemnity plan. That's all there is to it. If you sell one, you should sell the other. And let me give you some numbers. I know agents that sell at least 30 to 40% of their Medicare Advantage sales also include a hospital indemnity sale. So typical commissions, 50-55% first year on a hospital indemnity. Now, and what does this pay? It's that hospital co-payment that Medicare beneficiaries have often when they sign up for a Medicare Advantage plan. It's usually $350, $360 a day for the first 5 days, something like that. This will pay that, so they won't have to pay that $350 a day. They'll get the bill, submit the bill to the hospital indemnity company, and the hospital indemnity company will pay the Medicare beneficiary that amount so they can pay their bill. It's an indemnity product. But your commission is typically $264 on that at 55% on a $40. The average premium is about $40. So, and a lot of times they have, these are zero premium plans. So this is a lay down. It's an easy sale. And just ask the client, say, well, do you have $2,000 to pay this $350 a day or $375 a day times 5 days plus plus an ambulance ride, co-payment of $200 or $250, whatever it may be. So this is an easy sale. And It's $40. It's $40. It eliminates a big chunk of that worst case scenario. How do I reach my maximum out of pocket on a Medicare Advantage plan, the MOOP? Well, this addresses that. You'll never reach it in many cases if you have this plan. You would receive an advance of $198 on that. That's not bad at all. That's if it's a 75% advance. Again, 50% advances are a better strategy for an agent. And they have good renewals, 10% renewals often. So there's nothing wrong with that. So write those hospital indemnities. Again, you've got to be able to sell these other products, especially if you're selling face-to-face. This probably does not apply to the agent that's selling over the phone and selling Medicare supplements. You're watching this saying, this probably isn't me. But know it and know it well, because more and more clients are buying Medicare Advantage. That's all there is to it. Let's move on. Annuities. Why do I bring up annuities? Well, because it's an opportunity for an agent to make a bunch of money. Somebody has a 401k, a CD, they have a IRA somewhere, they're in the stock market and they're going crazy about this roller coaster ride they're on. You can take that burden off of them and move them to something safe. You can take them out of the bank where they're getting 1% return on a CD and move them to getting, something a little bit more fair. And that's the word I use. They need to be treated fairly. A 10-year annuity typically pays about, when I say 10-year, these are usually fixed index. A lot of agents sell fixed index annuities. So on the 10-year side and the 7-year perhaps. So it's 7%. So on a $100,000 annuity, you're going to get $7,000 commission. And that's, why do I use $100,000? Do I just pull that number out of the hat to make it a nice round number? No, that is very typical. A lot of times people have about $100,000. I know over the years, I average about $100,000 on my annuities. So that's why I use that number. Again, a 10-year fixed indexed annuity is going to be about 7% commission. It's going to be $7,000 in your pocket. Done. Okay? Pay your taxes. A 7-year annuity is going to be 5 to 5.5%, or let's say $5,000 commission. So again, because the insurance company has less of a commitment from the insured, because an annuity is an insurance product, even though it acts like a savings or investment type program, it's not. It's an insurance product. And so the lesser commitment that usually it comes in the form of a surrender charge would be a 5% commission. And then a 5-year annuity, and this may be just a fixed annuity, this may be a regular fixed annuity, is going to typically be at 3% commission or $3,000. I like to sell annuities when people just don't need the money. And you find that all the time with seniors. They're just never going to spend the money. So I'm going to give them the most feature-rich annuity that I can give them. They're not going to spend the money. That generation, now the baby boomers coming in are spenders, more so, but the previous generations are not. So when you get somebody, especially if they're around 70 or something like that, it's a great percentage of them are just leaving that money be. They'll never ever spend it. Never ever spend it. And why would you not learn how to sell these annuities? Again, this is what a Medicare agent should do, especially if you're selling face-to-face. Again, if you were taking inbound calls and you're in some type of call center, well, you can't. But if you're in an inbound call center, you probably don't own your business either. So that's something for you to think about. All right. Now, there are other products. As you see here, I've got dental, I've got long-term care, I've got life insurance. I could talk to you about all these products. I don't sell them. I just don't get into it. First of all, long-term care insurance. Most of my clients are age 65. If somebody has not bought long-term care by age 65, the sales are going to come few and far between. People aren't going to qualify, and the premiums are going to be outrageous. So I would not waste a moment of your time on that. But you need to be versed in what it is and the objectives of long-term care to preserve the estate. That should an individual be put in a nursing home, become mentally incapacitated where they cannot manage their own affairs. When they go into one of these facilities, what is going to happen to the estate that they've established when the monthly cost of a long-term care facility is in excess of $9,000 a month? It's outrageous. When I tell clients that, I sometimes feel like I'm using fear tactics, because telling them that's how much it costs. But that's just what it costs. There's no gray area. But again, you want to talk to them about preserving their estate. You can't, in most cases, sell them long-term care insurance because it's just cost prohibitive. There are other types of products that are hybrids that pay long-term care expenses. You may want to learn about those, where you transfer money in a lump sum into an annuity, and then the annuity will have a multiplier effect where it will pay long-term care expenses. So there's all different types of products, and they even have insurance products that do the same thing, or life insurance products. But I'm not going to get into that. It's a lot to get into. And again, the long-term care is a conversation that you have to have, not a product that you sell. Life insurance. Well, this is where you get into term insurance for your buddy down the street or something like that. It's fine to sell if it's easy, but if you get into some complicated stuff, it's just going to wear you down. When I say wear you down, it's going to take you out of your rhythm. Okay, you're selling Medicare and you're selling these things, and you remember each one of those is worth better than $1,000. And then all of a sudden, the guy down the street wants $500,000 of 20-year term life insurance. You stop everything because now you got to figure this out. Unless you can just do a quick quote and get it sold. If you can't do a quick quote and get it sold, I wouldn't mess with it. It takes you out of your rhythm. I see this over and over and over. It takes people out of their rhythm. If you understand it, you know it, then do it. But focus on, be a specialist, not a general practitioner. Dental, again, there's a bunch of products, a bunch of other products. I don't like dental. I'll do the reimbursement plan that some companies have. It might pay 40% commission. But even there, you have your preventive, your basic, and your major or restorative benefits. There's time, waiting periods and stuff like that. God forbid you get into a traditional dental plan. They don't pay hardly any commission, and you're just going to answer a bunch of questions, and it's just going to wear you down. I say wear you down. It won't wear you down, but it takes you out of your rhythm. When somebody's asking you, what dentist can I use? And you're like, well, I don't know. If you do a reimbursement plan, you say use any dentist because they reimburse you. But again, be careful committing yourself to selling things that are going to take you out of your rhythm of selling the Medicare. And Medicare, final expense, indemnity, and annuity. If you can get that rhythm down and just know that, that's enough, believe me. All right, let's move on. And what are we going to move on to? Well, let's talk about SEPs. The first SEP, and the one, my favorite for selling Medicare Advantage, is Extra Help. Extra Help is when somebody earns, it's in your Medicare and U book. It's when they earn below a certain amount. It's like $1,500 and some dollars a month. I think it's $1,550 a month right now in 2020. $1,561 a month is I would have gotten on a branch and say, but I could be off by no more than $10, I guarantee you. But if they earn less than that, then they qualify for Extra Help. And if they qualify for Extra Help, they qualify for what's called an SEP, the LIS or Extra Help SEP, which they can use once per quarter. And they use that once per quarter. Now I wouldn't worry about the once per quarter thing too much, because if somebody's changing every quarter, well, you don't want them as a client. But they can change once per quarter, and it matters the quarter that they make the change. So if they make it in March and it's effective in April 1, well, they made it in the first quarter. They can still make a change in the second quarter. It's when they elect to make the change, not when the change occurs. It cannot be used in the final quarter of the year. Okay, that's AEP, and that started last year. And so after December 7th, you could not do an LIS change. So now this also, a lot of people don't realize this, but if somebody loses extra help, that's an SEP. They lost their extra help. They now qualify for an SEP. So they get 2 months after the month in which they've lost the extra help. They've got 2 additional months. So that's a wonderful thing for you as well. Somebody loses their extra help. Let's move on to dual coverage. What is dual coverage? It's Medicare and Medicaid. The rules are the same. Dual coverage, it's, again, if they have Medicare and Medicaid, so they have Medicare A and B and Medicaid, they get a SEP, a special election period. Again, it's once per quarter. It's effective the first of the following month. It cannot be used in the final quarter of the year. They must use their AEP, again, October 15th to December 7th. And otherwise, they have to wait till January 1 to make that change, even if they have Medicaid. And they also get that 2 months in the event they lose Medicaid. So losing Medicaid triggers an SEP. Let's talk about loss of credible coverage. Individuals who lose credible drug coverage, including a reduction in the level of prescription drug benefits, so that the coverage is no longer credible, qualify for an SEP. They lost credible coverage. This is a one-time SEP. So if somebody lost credible coverage and they can switch when they lose their credible coverage, they can go to a Part D drug card or a MAPD. So again, this is not, well, somebody could go to a Medicare supplement anytime they want, right? As long as they don't have a Medicare Advantage plan, they can go to a Medicare supplement from their, when they lose their coverage. It's the drug card that they get, that this triggers for, the loss of Part D benefits or loss of credible prescription benefits, and gives them the option to go to a Part D drug card or a Medicare Advantage plan. Okay, so that gives them that special election. Or they can go Part D drug card, and in addition to the Part D drug card, they can get a Medicare supplement. All right. That must be used within 63 days of the loss of that credible coverage. 63 days. So, those three, you're going to see a fair amount of those. You're going to have other SEPs. I've got here that if your client had enrolled in a Medicare Advantage plan and they should not have done so, under CMS's discretion, they qualify for an SEP. So somebody gave them bad information, an agent. Even if it's a Medicare, somebody at Medicare, 1-800-Medicare, they called into 1-800-Medicare and they got bad information, they can get an SEP. Now, for an agent, it's like, as a matter of fact, they use this terminology. They say even federal agents make mistakes, meaning people at Medicare. So it's understandable that they make mistakes. But for an agent, it's not understandable that you make a mistake. As a matter of fact, it will often require that a complaint be filed. And I remember one time I had a situation where I had to call Medicare And I had to tell them, I say, look, I made a mistake and made a change for somebody. I need, if it requires a complaint be filed against me, then we need to initiate that complaint right now. And you know what, that Medicare.gov employee, when I called 1-800-Medicare, they were nice enough just to give that person an SEP and not require them to file a complaint against me. And so that was nice, you know, but they can file a complaint, and that would substantiate and validate the SEP. So it makes sense, doesn't it? The agent's always wrong. When a beneficiary moves outside their service area, that's an SEP. Now, it begins the month prior to the move, so the individual, the Medicare beneficiary, can have an opportunity to vet and change plans prior to moving. It includes the month during the move and also 2 additional months after the move, after the month of the move. So they give them plenty of time. There are other SEPs. You're not going to use a lot of these, but for institutions, if somebody's entering, is a resident of, or they're leaving a long-term care facility, that would trigger an SEP. Again, there are some others. If somebody gets out of jail, that triggers an SEP. You know, so there are some others, but the first 3 that I stated are the ones that are most common: the LIS, Extra Help, and Medicare, Medicaid. Now, there is another category of opportunity for agents for year-round enrollments that I'd like to discuss at the same time. That's when somebody qualifies for a special needs plan. If they have diabetes or they have heart disease, that gives them opportunity to enroll in a special needs plan. And that is a year-round enrollment opportunity as well. So know your SEPs, focus on LIS, focus on dual, focus on C-SNPs. And when I say dual, that would be referred to as a D-SNP. Dual special needs plan. C-SNP is a chronic special needs plan. When somebody has that chronic condition, they get that year-round SCP. So, and then the loss of credible coverage is a very popular SEP as well, because they work beyond age 65, and it's now June. They say, you know what, I've had enough. I'm turning 68 this month. I'm done with that place. Or, you know, for whatever reasons, they're losing that credible coverage. That's when you as an agent need to be there, and you need to understand and act quickly, because they only get the 63 days to make that change. And that is a very common SEP. There you have it, video number 2 of Medicare BootCamp. Video number 3 is coming at you real soon. We're going to cover some more important topics for you as an agent to understand the basics of Medicare and how you need to operate as a Medicare agent to be successful. Don't forget, you need to have a strategy, a plan. You need to be working every single day, and that's what the 30-day Agent Fast Start program will do. Go over to Medicare.gov. No, not Medicare.gov, Medicare Millionaire.com. And we'll get you signed up for the 30-day Fast Start program. We'll talk to you soon. Bye.